Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at gold, which is the CFDs on gold, and we're also going to be looking at the SLV ETF, which is our proxy for the silver market. Got quite a few things to go through today. We've had an invalidation of the silver count and need to stop and have a total rethink really. But before we begin, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and wish to show your support for the channel, then why not join Tier 1 for just £5 a month? You still bag yourself an exclusive video each week that won't be available on YouTube. Or why not consider joining Tier 2 for just £10 a month? You still get the same exclusive video each week, but you also get access to the public Discord. There are multiple channels where you can discuss things to your heart's content on multiple subjects with all other Discord members, including myself. You also get access to the entire back catalogue of my educational videos, including the Elliott Wave series, plus other technical analysis videos, including trading and trading risk management. I also host a live session each week via private link to the YouTube. Then finally Tier 3, for £15 a month. You get all of the previously mentioned benefits from Tier 1 and Tier 2, but you also get access to my monthly dividend calendar where I list my stock picks for the month and all of the relevant ex-dividend and payment dates. You also get access to my stock rating system, which is an at-a-glance rating out of 30 based on company health, value and overall dividend quality. If you yourself wish to look up a specific ex-dividend date or payment date, tag me on the Discord and I can look it up and get back to you. Also, if there's a stock you're interested in and you want me to use my rating system on the stock that you had chosen, tag me in the Discord and I will get back to you with a score. Thanks for listening guys, and now back to the video. Okay, welcome back guys. Okay, so the first thing I want to do is, actually I'm going to start on the SLV chart rather than gold. We'll come and look at gold second. The reason I want to give silver priority today is we've had an invalidation of our previous count and we need to have a bit of a rethink, well, a lot of a rethink about what's going on here. Now I've looked at the XAG chart as well. Somebody asked me the other week, why don't you look at XAG? I do, to help get rid of all the gaps and stuff that we see here in the SLV chart. But the thing is, on the SLV ETF I get to use my volume profile and volume overall, which I don't get to use on the XAG spot price silver market. So that's why I generally prefer using the SLV. Now you'll have to forgive me a bit today. I'm a little bit under the weather again, having caught a bit of a cold, so my voice is a little rough, and I'm just going to do the best I can with it. So let's look at this problem. So I've been saying wave 1 complete here, 3 waves into an A, double zigzag into a B, 1, 2, 3, 4, 5, diagonal of the contracting variety into a C, so 3, 3, 5, flat pattern, and then this was going to be 1, or I should say more specifically, this was 1, this was going to be an expanding flat into a 2, and we were going to go off into a 3. Well, not an option anymore. We've come back and broken this low, having retraced the whole of the wave 1, which is a strict Elliott wave rule. We cannot break that. Wave 2 can never retrace beyond the point at which wave 1 began. Okay, so the next thing I looked at and thought about, let's just delete this because that's no longer valid, was to just move the wave 5 to here, the 3 to here, the 4 to here, and suggest that we had a double bottom into a same diagonal pattern here to complete the 2. Right? Then I stopped and measured it and realised that this is invalid. So anyone who's proposing this 5 wave move down, whether it's they're proposing for it to continue before completing the 5th, or whether they're proposing it to be complete already, is either not very familiar with Elliott wave rules or is willfully ignoring them. So let me explain why. So, excuse me, I just had a bit of a coughing fit and had to mute the microphone for a moment. So, 3 waves into a 1. We can live with that. It's not ideal, but it's there. 3 waves into a 2. We can live with that. The issue here is, if we're saying this is a diagonal, and the 4 we know for certain is smaller than the 2, then that means it's of a contracting variety. All diagonals, especially an ending diagonal, must be comprised of a series of 3-wave zigzags. It cannot be comprised of 5-wave structures. So anyone who's labelling this as 5 or this as 1, 2 here, same problem. Cannot label it that way. We've got an overlap with the 4 over the 1, so it's a diagonal. So it's 3, 3, 3, 3, 3. The 4 is confirmed smaller than the 2. Okay, so that's cool. What is not cool is the fact that the 3 is bigger than the 1. Now you might say the 3 can't be the shortest wave, Tom. It can't be, and it won't be. But it has to be shorter than the 1 in a contracting ending diagonal. And since this is a wave C, this is an ending diagonal. Ending diagonals are in wave 5s and wave Cs. Leading diagonals in A's and 1s. So, if this is being labelled as a diagonal with this overlap, it's incorrect. So we cannot tolerate this from an Elliottian point of view. So we have to discount it. So in that case, we're just going to save the chart here, and we're going to delete this. Okay, so get rid of the ABC, get rid of the 1, 2, 3, 4, 5, move the 2 and the C out the way, and we're just going to grab these things here. I put those into the bullish count, text and price label. There should be a horizontal here somewhere. That's obviously separate. Bag those together, hide it out the way. Okay. Right then. So if this isn't 5 waves, and to be honest, I've had issues with accepting it even prior to being invalidated. I had issues with accepting it as 5 waves because this, to me, this looks like 5 waves, and this is a totally legit diag, right? Sorry, what I'm saying. This is going to be A, right? We know it's not 1 because we've discounted that idea. So this is 1, 2, 3, 4, 5. This is the length of 1. 3 is shorter than 1, but 3 is longer than 5. 3 is not the shortest wave, but it's shorter than 1, which is it has to be in a diagonal. 4 is smaller than 2, which it has to be in a diagonal. So this is perfect. This is an absolutely perfect leading diag. So that now makes me want to do this. A. Okay. Now the issue is, how do we get down to here? Right. B. Can we say C to here? Well, that would require some kind of impulse where this was part of an overall downward trend, and I can't see that, to be absolutely honest with you. I see this as a move, I see this as a move, and then I see this as a move. 3 waves here. Okay, it may not even be complete. Alright, because this might be part of a 3-wave structure. So I don't see that as a possibility. So the issue we end up here is we've got to move this C to here. Right? So we can get a diagonal in here for an A. We can then get an impulse in here for the C. And I think that's going to be your best bet. 1, 2, 3, 4, 5. Something like that. So we can get an ABC structure in here. Okay. In fact, that might be the 1, 2 there. And then this is 1, 2, 3, 4, 5, 3, 4. No overlap. I'd have to come in and dig through it on the XAG, I think, to fill out all these gaps, but I think that would work. So this now becomes a separate ABC, which means this now becomes a zigzag, because it wasn't a flat, because we came back through where we began, right? So at that point, we've got to say A, B, C as well. And then at that point, since we're not working with an impulse from this point. This is series of this is a separate zigzag, this is a zigzag, and this is a zigzag. So this is likely incomplete as well, like that. So now at this point we've ended up with a whole bunch of zigzags. So we can't have a flat, we can't have 3 3 3 3 3 3 and call it ABC. So we've got to get rid of the ABC at that point. So we'll just save the chart. Okay, so get rid of the ABC. Right, so the best I can make of it now, having worked our way through this structure, let's just label this as a diag. Is that this is a 3-wave pivot to here. This is a double zigzag to here. This is a zigzag with a diagonal in the A to here. This is a zigzag to here, and this will be a zigzag to here. So at that point, I'm basically having to say W, X, Y, X, Z. Okay? So I'm saying it's a triple zigzag. Not a combo, a triple zigzag. So we got a zigzag connected to a zigzag connected to a zigzag via 2 X waves. One combination, one double zigzag in itself, and one simple zigzag in the secondary X here. And that is the best I can do given the invalidation we've got here. So what this helps us do now is look at the overall picture. So what I just want to do is just take a step back for a minute. Excuse me, my voice is playing off a bit. So this is the low. This is where I was saying cycle wave 2 completed. And so from that point we have a impulsive move up into a 1. And then all of this is going to be R2. And then we're off to the races. Right, silver's got a lot of catching up to do. Gold moved off of the lows back in 2016 and put in a 1 2 like this. Didn't go back before where it began, obviously, but it's like 1 2 and then it began its way 3. Excuse me. Whereas silver bottomed here in March 2020, where most of the other commodities market bottomed. You know, we saw uranium bottom there. We saw several other commodities all bottom. Oil, of course, reached 0 in March, April in the futures market. So we saw a long-term bearish market over a decade, longer in the case of some commodities, and then bottoming here. Something fundamental. We know what happened here. We know the pandemic began, but something fundamentally shifted in the economy as a result, and we have moved into a commodities bull market. That's what I'm thinking is happening, and therefore commodities across the board, although they are retracing deeply at the moment, are going to continue to rise in price for the next quarter century, would be my call. Now that's just my opinion, I'm not saying that's a fact, so don't quote me and say it's the truth. But I'm just looking at the completion of a long-term bear market and the first impulsive move off of the low. So I think we've entered a new bull market in commodities, and it's all over the place in terms of all the commodities it's affecting. So now let's take a opportunity to run up a fib from our established low to the top of our 1. Now I'm not taking the swing high here, I'm just taking the top of the 1, as I want to know how much of this move we retrace, not the move to the high, as I believe the high is a swing high of a larger correction. Right, so 61.8% would be a typical retracement. So let's have a look at what a 1-to-1 ratio of this final ABC would be if it's done. So that puts us somewhere shy of the 61.8, but it puts us straddling the golden ratio. So here's the 123.6, here's the 131.8, and here's the 61.8 retracement here in between the two. So this is a perfectly acceptable target for a C in that final zigzag of the Z wave. Okay, so A, B, C to finish off the Z. Come back to the 61.8. Now let's have a look at some of this prior market structure here, shall we? And let's just get a horizontal, and that's a high, they're highs, those are highs, those are highs. So there, down a little bit to take into that low and those highs. So a little bit above the 61.8, there's some serious potential for support. We've got a low, don't quite retest it, resistance. So this was a support, this was resistance, 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 resistance. So this is all support and resistance. So there's serious structural support here further down. So let's just put a band across that. Okay, because it's more of an area. Yes, there's some really solid points, but it captures some slightly higher highs and some slightly higher lows. Whoops a daisy. So we want to take in that high as well. So let's just go to the top of that. And that high as well, I think. So there you go. We've got some serious support coming up. All this previous market structure. So let's have a look at the VPVR here. Now, point of control, depending on how much price action you're consuming, obviously, because this is a visible range, is a little deeper down. Right? We don't have to come to the point of control, but where we've got the greatest level of market acceptance in amongst all this noise is here around $16, 15.87, $16 region. If we're taking a little less data, it comes a little higher, to like 16.13, but the golden ratio is down here as well. So let's just change the golden ratio fib here for a moment and put up a wave 2, and let's throw the 707 into the mix. If I've got it on here, no, I think I'm going to have to use the standard fib. Yeah, there it is. So the 707 is here, as I suspected it would be. Somewhere between the 61.865 and the 78.6, we've got our point of control on the 707. So this is not a typical fib retracement. It's just something I use occasionally that I see tends to crop up in certain markets. Not all the time, but it's just one of those explanations for when we get an overrun. When we tend to, rather than front running support, we overrun it. And then sometimes the 707 comes into play. I can't prove that it's a position, that it's a figure anybody should have on their fib retracement. It's just personal observation. Right then, so down here, point of control, 61.8, prior market support, structural support is all in that region. Tell you what, I'm not going to bother with that. I'm going to actually just put a box down here and say between the 61.8, between all this market structural support and the point of control, we've got a likely bottom down here for our WXY. Push the C out a little bit, give it a bit more time. Save the chart. So there you go. That's what I've got for silver now. This is going to become the primary count. So let's... Also, you can put it in the bull count because it is still extremely bullish long term. But, you can't have all the people who came into SLV making money quickly, can you? That would be silly. This market is a very manipulated market. And I'm not saying that as some kind of tinfoil hat, paranoid delusionary. We know who owns the most silver in the United States. We know they're a bank, and we know their ability to suppress the silver price. And I think they've got a long-term play in mind that's going to make them stupendously wealthy. And let's just consider that for a moment. Let's look at the weekly time frame here. So let's say we come down into the point of control, into the market structure, into the 61.8, which is somewhere in between these two levels, and this becomes our bottom for a 2. Then we have just begun a cycle wave 3, a primary 3 of a 3. So shit pardon my language, is going to get real over the next decade. And in terms of primary degree, things are going to get real over the next 24 months. So let's split the diff and say in the middle here, and then we can project the way free. Right, I'm making an assumption that we're going to bottom somewhere in that territory. I can't prove it. It's just my assumption at the moment. Okay. Here's the 1-to-1 minimum target for the 3. Right, I don't think that would be the case. I would keep an eye on this level, just in case we are actually doing some kind of A, B, C retracement. I don't think that's the case. But 1-to-1 should be the first thing we're going to tick off if we break it. I think this is an impulsive move into a 1. This is a complex correction into a 2. At that point, the 3 is up here at the 618. And this is the 3 of the 3. Remember, guys, this is not the completed cycle 3, which is going to be considerably higher. And this is the 1618 target. This is not the 2618 target or the 3618 target for the 3. I'm being relatively conservative here. The reason I'm doing that is we could be even more conservative and accept the possibility in the commodities market here of an extension in the 5th, being as we're talking about silver. But let's just pick 1618 rather than the more extreme wave 3 targets. That puts silver up here. If we bottom where I've said we're going to bottom, or where I've suggested we could bottom, that gives us $43 silver. Right? The low was $10.87. That's a hell of a move, and that might not even be the top of the 3. The 2618 is up here at $60, and that could still be primary 3. Cycle 3 is way higher. Right now, there's no point talking about it because we're talking about this move being the 1, this being the 2. Right, so the 3 is going to be measured off of this wave 1 move. So as you can see, bloody high. So over the next decade, if that's correct, and we put in a cycle wave 3 over the next 5 to 10 years, silver's going to the moon, essentially. Now, I know this sounds like moon boy talk, but I can't see another interpretation for this at the moment. If we bring up our moving averages, we can see a bear market ensued in 2011 and has lasted to the low of 2020. Right, so 3,241 days. That's how long it took to get through this bear market. Fall through the 10, 20, 60 and 250 exponential moving averages and remain suppressed and below them until we bottom to a lower low. We then thrust our way through the 250, 10, the 20, 60 and the 250, bring all moving averages positively above the 250 and are now retracing to retest. Okay, to find support. Could find it earlier than expected, but I given market structure, support, point of control, Fibonacci retracement, all that stuff, I would expect maybe a break of the 250. Okay, because I think that would be a good shakeout. That would shit people up a bit, wouldn't it? Come down, break a major moving average, people would start to despair. That would be a good opportunity to pick this thing up cheaper. Okay, I would love it if this possibility reflected the premiums that I could get off of buying physical silver. But the fact of the matter is, it's just obscene. At least in my country at the moment, here in the UK, I just cannot bring myself to do it. So ETFs and mining stocks are the only real way to make this play, unless you already own a considerable amount of physical silver. I do, but my god, I would love to stack a lot more, but I just can't bring myself to pay 50% premiums. It's not acceptable. And you might say, oh well, yeah, but if you're going up to $44, then why not pay it? And it's like, I hear you, but you know, it's more of a case of principle that I won't overpay to that degree. I'd rather just live with what I've got and load up on the derivatives, you know, or even a spot CFD would be an option as well, which if you wanted to trade it in leverage you could. But anyway, that's silver. Let's have a look at our momentum indicators here. So, alright, We currently have, see there, that is a slightly lower low, so we got bullish divergence here in the RSI and in the MACD, because that is a slightly lower low. So the only way that is going to convince me that I've considered this incorrectly and that there's something else happening would be if this does turn out to be a low, in which case this was likely a zigzag in here. That seems very odd to me, that does. And then this is going to be impulsive. But if that's the case, I'd expect to see this downward trend break and, you know, us to come rip-roaring out of here. If we do come rip-roaring out of here, I'll reconsider. But for the moment, this looks likely to be for another three-way structure. Okay, but I'm always open to changing my mind. So perhaps there's plenty of room to come down in the C and get another big oversold condition. Maybe we'll get divergence between this low. Depends how fast we come down here. Same with the MACD here. Come down lower. I wouldn't suspect there to be bullish divergence if this is how much we've got to make up. If we've got to come this far down here, I wouldn't expect to see divergence survive, really. I mean, it's possible. It's possible. We'll have to wait and see. Okay, so that's silver. So now let's come over and, now that we've corrected that, and have a look at gold. Okay, so let's come over and have a look at gold. You'll have to forgive me, my voice is struggling a bit here at the moment, quite sore throat. So hopefully better soon, because I want to get a live session in for my patrons, but I'm just not sure I'm going to be able to survive 5 hours of talking, to be absolutely honest, which is how long we tend to go into things, sometimes longer. But anyway, getting back to the point, I've consulted with my closest and brightest Elliotician, who is always there to check my ideas. That's my wife. She knows it well, and she knows how I think. So she's the perfect person to call me on anything. And we have some very competent people on the Discord, some really competent members on the Patreon who are good Ellioticians who have got great ideas as well. But it's more about how well somebody knows how well I think. And she has reliably informed me, guys, that this whole thing is a mess. And you know what? I'm inclined to agree. So what we're going to try and do is try and simplify things a little bit today, because I'm starting to call bullshit on my own bullish count here, the way I've interpreted it, because it's just getting so messed up. I'm not happy with it, but that doesn't mean I'm going to give up on it, not until it gets invalidated. But I have had to consider more and more alternatives, so that's the point. So, quick reminder about what gold's been doing, right? So, the March 2020 low was the low for silver. That was back here. That was the wave 2 bottom. But for gold, it was simply part of its march up into its wave 3. So here's the primary 1. Here's the primary 2. And then we've gone 1, 2, 3, 4, 5. Extended 5th wave in a commodity like gold is quite usual. 3 is not the shortest. So legit wave 3 up to here. So gold completed the wave 3. At roughly the time silver completed its wave 1. Silver's going down into its 2. Gold is consolidating into its 4. Now, if you follow the gold and silver ratio throughout history, this is one of those self-explanatory things. It's really just a function of price. So gold races ahead because gold is the traditional hedge against inflation. You know, and inflation has been a growing concern, not just over the last few months, but basically based on monetary policy and other factors. Inflation has been a consideration for a while. Now, we've also got the industrial use of gold. You know, it cannot be surpassed as a conductive metal. It doesn't tarnish, it doesn't blemish. Gold circuitry is the absolute norm in computers and phones. Silver is also an excellent conductor as well. So there might be precious monetary metals, but they have an ongoing industrial use, which is only going to become more in demand as we move into an even more electronic circuitry world, where we want to abolish the internal combustion mechanical engine and replace it with electric motors you know. And of course the third world continues to develop, and its appetite for more electronics just continues to grow, so there's always going to be huge demand for gold and silver from a industrial perspective. But let's consider the monetary demand potential. So gold races ahead and eventually just becomes too bloody expensive. Just too expensive. The average Joe shows up and they're like, oh, been hearing about how I should have owned gold and I should have brought gold to hedge out inflation. But by then we've raced up here. Nobody took it seriously while it was happening. You know, they miss out 100, 200, 300% rally or whatever. They don't take gold or precious metals seriously. By the time they realise they should, it's too late and it's too expensive. Right? So what do they look around at? They look around for something cheaper. Silver. So gold gets up here first, silver is here, while gold is here. You see? And then that's how money transfers via the gold-silver ratio into silver to bring it up to speed. Yeah, it's just I imagine we're going to see similar impact in cryptos, you know, as a new generation of people get exposed to the same way of thinking, which is, oh, I can't afford to buy Bitcoin at 64, 54, 44 grand, but I can afford to buy XYZ at a fraction. And surely it's basically the same thing. Now, I'm not saying that's true. I'm just saying that thinking is, you know, pretty logical. It follows the same kind of thinking as in gold, right? And gold and silver. So, anyway, getting back to this mess. Let's look at my current bullish interpretation. So this has been a bit straw clutchy for a while now. And it's the idea that we've completed a correction here in a 4. And then we've gone into a 1, A, B, C, into an incredibly deep 2, but legal. Then we've gone 1, A, B, C, expanding flat, 2, running flat, excuse me, as we didn't make a new low. Legal, but not exactly nice. And then we've had to go, this is where things really start to get a little crazy, or a little silly. Is I can't get an impulse in here, and I can't get a diag in here, okay, because this is so obviously 5 waves, right? So this is ABC, because this is 5 waves, and this is 3, and this is 5. So the only way I can really make this make sense from a bullish point of view is this was 1, this is A, this is B, and this is going to be maybe a diagonal, maybe, into a C of a 1 into a 2, before this low, and then move up into a 3. So we've gone 1, 2, 1, 2, 1, 2 in a 5th, which is suggesting a huge extension in the 5th wave. Now, extensions in wave 5s in commodity markets are far more common than they are elsewhere. Excuse me. But I still think I'm stretching this one a bit, to be honest. Now, I'll keep this count, and I'll keep considering it for as long as this low holds, which is our bullish invalidation point. Excuse me, just had to pause the video. I had another coughing fit. Right then, so that's all well and good. So we're going to hold on to that, but I'm losing faith, big time slightly. Okay, especially now with our recount in silver supporting lower pricing. Doesn't have to do the same thing as gold because it's in a different wave, and therefore we can expect and consider completely different structures, which is what we're going to do now. So, what could this be? What could this be? Right, well, my first instinct was to look at this as a potential for a triangle. Excuse me. So, but here's the problem. I cannot get an impulse in here. Just can't do it. Right, so I couldn't. The idea of this being a 5-wave move, this is why I'm considering this as a triangle, but the problem is I'd love to get an impulse in here, or a diagonal, so I can have A, and I can have B, and C for a zigzag into an A, but I can't do it. It doesn't work. If this is a diagonal, then we'd have to say this is 3 waves into a 1. This is 3 waves into a 2. Then where's our 3, 4 and 5? Just doesn't work, does it? Okay, so what if we went 1, 2, 3, 4, 5? The problem we've got here is the length of the 5. This would be a contracting pattern, right? And it breaks, has a throw over, and ends up with a longer 5, which we can't tolerate because that breaks the idea of it being a diagonal. Well, what about an expanding diagonal? Well, if this is the 1 and this is the 2 and this is the 3 is not longer than the 1, and therefore it should be 3 should be longer than 1, 4 should be deeper than 2. Not true. So it's not a diag. I can't get A, B, C. But I can just about, because of this being a move, this being a move, and then this being a move, 5, 3, 5, I can get A, B, C into here for a W. Right, then I can get a move down with a truncation to here, which I have to move everything across slightly. I can get that into 5, right, or A, B, C, sorry. So 1, 2, 3, 4, 5, A. And this becomes B, and this becomes 1, 2, 3, 4, truncation here for 5 for C. So I can get a zigzag, excuse me, in a W connected to another one here. And that's about the best I can do. So what don't I like about that? Well, if we're going to have a complex correction in a triangle, we're only going to have one of them. We can have an interjoining triangle within the triangle, or we can have a complex correction. Now, the complex correction, WXY, WXYZ, zigzags, flats, combinations of such in a WXY should not be occurring in the A wave. It's not a rule. It's not a rule, so we're not breaking a rule. But as a guideline, we'd expect to see C, D, or E contain the complex correction. It's the most common occurrence for it to show up, and it's not here in the C, D, and the E. Instead, we just get a series of very pretty, very clean zigzags. Right? Let's show you what I mean. Lovely, clean zigzag. Lovely, clean zigzag. So this is going to be a nice, clean zigzag. And then that's 4. And we're done. Off into the 5. So, I can live with this idea of a triangle. But I have to be honest, I don't like the A subdividing as a double zigzag at all. I have a deep dislike for that. Excuse me. So that's really my alternate for gold at the moment. Now, the next thing we have to consider is the continuation of a more complex correction. So let's do that. Right, so bear with me, I'm just thinking for a minute. What's this swing to come to? I might not be able to find anything else here, and I'm just going to have a think. So I can 3, 3, and 5. It's dodgy. I don't. To be honest, this whole structure I'm not a big fan of at all, really. From a bearish point of view, if this is just subdivided as an impulse, life would have been so easy because you could have gone, oh well, this is the A, right? This is a triangular B, right? And then we're going to come down into a C. But I can't get this to count as a diag, which is with all the overlapping it would have to be for that to be a bearish structure. Could it be WXY? So W, This is an X-wave triangle. A, B, C, D. Gonna complete here. And then we get another zigzag for our Y. Maybe that. But then we want to see, and this is one of the things which annoys me to no end, is if we get a WXY and we say, right, we're expecting... Right, when we say WXY, what are we saying? Okay, we're saying double zigzag, double flat, double combination. What's combination mean? It's a combination of corrective patterns, simple corrective patterns, flats and zigzags. Okay, so this is a habit which annoys the hell out of me, but I've done it myself in desperation. Is when people go, oh, WXY, right, well, in the W, this should be a zigzag or a flat. Combination or zigzag, right? As in the whole thing of this combination, this should be a zigzag or a flat. And then people come in and they go, oh, WXY within the W. And it's like, well, that's not a double zigzag, is it? Because this isn't a zigzag. Alright? So the question becomes, can you have a double combination with a complex correction within a W? And the answer to that is, no one fucking knows. That's it. Not mentioned anywhere. So, my way of looking at it is, if you're going to say from the Elliott wave principle that combinations are structures of simpler corrective patterns, then we should be labeling the substructures as zigzags or flats, ABC patterns, not further complicated combinations themselves or complex patterns within them. So saying WXY within W is a bit of a cop-out, in my opinion. I'm not going to argue about whether it's legal or not. I'm just saying it's kind of breaking the principle of these complex patterns being comprised of simple subwave structures. But sometimes needs must when the devil drives. Okay, so at that point, I think this is the only real alternative from a bearish point of view. This whole thing is either a complex A in the triangle, WXY, A, B, C, D, E, got another move down, zigzag here and E before we go higher, or this triangle is a corrective connecting structure, X wave. Okay, let's just label it up, and then we'll put this in its separate little count, and then this way we're going A, B, C, D, E. Right, completion of the X wave, then down into another zigzag into a Y. So there you go. I'm going to just save that now. Deeper complex bearish. I don't remember what that is. So that's really all I've got for you. So what we'll do before we leave, throw our primary count back up. Bullish invalidation for the short term in terms of how I've interpreted it. Long term invalidation point is 1,000,000 miles away, back at 1370. Back here. So there's still loads of room for this to be a more complicated way forward that has yet to complete. Take the count off and let's bring up our moving averages here. Oh, let's go out to the weekly. And let's do some basic analysis here for a moment. Bring up our momentum indicators. Now when I look at the MACD here, I see potential support for the idea of a triangle. Where are we going back to? Here. Low, lower high, higher low, lower high, higher low. What's the RSI look like? That is a lower height. Now we do like to see RSI supporting a triangle, and I think there's an argument here that that is supporting the idea of a triangle. But like I said, I don't like that complex wave in the A. That's just me. Not saying it's impossible, I just don't like it. Right, let's just have a quick look at what we've retraced. If this is a wave 4, that's going to be 38.2. I think I measured this before. Set this up as a wave 4. Yeah, so we come to the 38.2, and we're just kind of squeezing ourselves in between the 38.2 and the 23.6. That itself is looking more like a triangle, isn't it? Supporting the RSI and the MACD for it. So my bullish count, which is still valid, I'm losing faith in this being a 1, 2, 1, 2, 1, 2. That's just looking a bit dodgy now. I'm not going to say it's impossible. If we break out of all of this downward move and we thrust up here in a big impulsive move, and I'll be like, alright, maybe it was right. But we have to consider alternatives. So I'm just going to leave you with the idea that this is either A, B, C, D, E to come, triangle, or it's a move connected via a triangle to a move, and that's it. The bullish count is still valid. I'm not a fan of it that much anymore, but we're going to leave it until it gets invalidated or until we see something that completely breaks it. Something hasn't completely broken it yet, but I think I'm leaning into the alternate idea of it being a triangle more. I won't necessarily say I've upgraded it yet, because I'm still unsure about this move down. Very difficult to make sense of this. Alright then, so I honestly don't think I've got anything more to lend you guys now, really, so we'll leave it there. And if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And as always, a huge thank you to my Patreon subscribers. Your support is hugely appreciated. And if you're interested in joining the Patreon and becoming a member, head over to the link in the description box below, have a read of the tiers, see if there's anything you're interested in, and feel free to sign up. Also, if you're not following me on Twitter yet, please do so, as I always post notifications on Twitter when I upload a new video to YouTube. Alright guys, take care of yourselves, and I'll be back with you, as long as my voice holds up, hopefully soon, to look at Bitcoin. Take care guys, bye bye.